All right, friends. Hello and welcome. I'm Raymond Schulseth, based out of Chicago. Been in real estate for over 33 years this year. And today I'm here with my co-pilot, Debbie Morrow.
Good morning or good afternoon. I'm used to saying morning. It's afternoon.
We're there. Yeah.
All right, we have one of our partners with us today, George Newberry. George, say hi to everybody, and then I'll kick us off.
Good afternoon, everybody. Nice to meet you. Thank you for taking the time on a Sunday afternoon to learn more about what we're doing. We hope it's a great
Where are
opportunity.
where are you, George? Where are you? What
I'm in
location?
I'm in Barrington. It's just north of Chicago.
Oh,
He's here for the weather like me, Natalie.
Yeah, exactly.
but once you've been the weather all over places, you appreciate that kind of weather. It doesn't
Yeah,
matter,
yeah,
right?
that's true.
It's very different.
All right, guys. So what we're going to do today is we're going to jump into some slides with George. I promise it's going to be super, super short, and then we want to get directly into Q&A. A couple things. Debbie and I have been approached by a lot of these programs over the last 2 years, and there's been, pardon my French, a lot of bullshit around this stuff. So when
Right.
we've known George and his partner for over 2 years at this point, and we watched them go through multiple iterations of getting this thing right. And we are extremely blown away and impressed with the value that he's going to present today. And that's why we want to share it with everybody that's here today and joined in our group with what we're doing. If you've been in real estate for the last 12 to 24 months, you know times are changing. And Debbie and I are of the drive that we want to give agents as many tools to succeed as possible. And that's what we look at this opportunity is. So George, I'm going to pass the mic to you. Ask you to introduce yourself with a little bit of your amazing background, and let's hop into the slides.
Sure. My name is George Newberry. I beat you a little bit, Ray. 35 years in real estate, which actually makes me feel kind of old saying that, but it's a long time. My first job was 1990 in real estate. So right now, most recently, I ran a national mortgage servicer and originator, and then this FHA changed their guidance in December 2022, and it created this opportunity, which we've been working on for 2 years through, as Ray said, multiple iterations. But we're really excited with what we've come up with and the partners that we have and the opportunity that we're going to present.
Perfect, George. As we go along, guys, just drop questions in the chat because we're going to do a very open, long Q&A to make sure we answer everybody's questions. All right. Sorry, George.
Oh, no worries at all. So here's what we're offering you: the opportunity to earn 0.75% on every closed loan. On a $400,000 loan, that's $3,000. So that's the opportunity. That's what we can get you. And what are you going to be offering? And this is probably the most, so A, it's exciting to get paid, but B, I think this for me is the most exciting part. You will be able to offer products from Rocket Mortgage, Quontic Bank, and Fly Homes at rates and terms lower than if the consumers went direct. And this came about when we were working the program. We teamed up with Rocket Mortgage, and they're providing just extraordinary technology. But one of the agents, when we were first kind of working on this, said, "Hey, is Rocket just going to add some cost to the consumer and then pay me out of that? I don't feel so good about it." And so we shared the concern with Rocket, and we came up with, no, we're going to offer rates and terms that are less expensive through this program, through the MLOs that are offering this program, the agent MLOs, than if those consumers went on rocket.com and applied for Mortgage Direct. So through Rocket, you can offer conventional loans, jumbo loans, FHA, VA. Quontic offers non-QM type loans, ITINs, DSCR, investor, HELOCs. And Fly Homes has a product where, especially if you're in a competitive market, where it's basically buy before you sell bridge loans. So if you have a consumer that needs to sell their home and is looking at another home, they can make a non-contingent offer by utilizing Fly Homes products. So this is the menu of products that we can offer. And again, key part is the rates that you can offer will be lower than if those consumers went direct. Now, where did this opportunity come from? In December 2022, FHA clarified existing guidance and said that real estate agents can now earn both the real estate commission and the loan officer commission on the same transaction. That was previously not permissible. And this set off a number of originators to enter the market. In fact, Rocket themselves said, hey, we're going to start recruiting real estate agents to be mortgage loan officers for Rocket. And they did that. But everyone had the same challenges. The real estate agents needed to go through a pre-licensure course and then pass the NMLS national exam. And a lot of the pass rate for the NMLS national exam is roughly 55%. And then you have agents who are doing this kind of as a sideline effort. And it was tough. A lot of agents did not pass the test. And Rocket, in fact, last June, they said we're wrapping up, and they wound down their program. There's still some others that are doing it. But again, that path where you need to pass the test. And then even once you pass the test, you can only originate in that one state. Then you have to go in and apply if you want to originate in multiple states. So what we're doing, and the big advantage that we have, is instead of going down the traditional path, which is getting the state license, if you become an employee of a bank or credit union for that matter, there's no national exam, there's no pre-licensure course. All you have to do is pass a background check, and then you can originate in all 50 states. So a much, much faster, streamlined path. You tell some agents and they say, wait, can you really do that? And yes, it's a state MLO is the traditional path. A federal MLO is the path that we're working on. And again, it involves you become an employee, a part-time employee of a national bank. And we even made it so the bank agreed to pay for your training. And the training is there's you're going to learn about how to originate loans, but we're not turning you into mortgage loan officers. What we've done is we've taken Rocket's consumer direct technology. Consumers go every day and apply for loans on Rocket and go through the process themselves. And then mortgage loan originators typically use Encompass or some other loan origination systems where you really have to kind of learn. It's not intuitive. You have to learn. It's good technology, but it's something that you do as a profession. So we said, why don't we take Rocket's consumer direct technology and offer that to mortgage loan officers? So it's step by step, it's intuitive, and it's guided. It makes it very, very easy to complete a loan. And on average, it should take you roughly 1 to 2 hours in full to complete the loan process. And why is it? Why can it be done in so little time? A, you're partnering with the best mortgage origination technology in the world. And number two, once you take the application from the consumer, the Rocket kind of machine, or Quontic for that matter, largely takes over. There's processors, underwriters, funders, all that's done by Rocket. When they have a condition or something's missing, they need an updated pay stub, they're missing some signed addendum to the purchase contract, they're going to message you. You're the MLO, you're going to get the conditions, but it comes in the technology and you direct it. You send it out to the consumer. They have a link and they can upload the pay stub, or if you need something from title, you're quarterbacking it. Many of the things that you already do as a real estate agent to try to manage your transactions to the finish line already. And now you're also doing the mortgage, which goes hand in hand with that transaction. So we're excited. We think this is a big difference, that we know some of the, as Ray mentioned, there's others that have done this and are doing it, but many of them are training the real estate agent to become a traditional mortgage loan officer, training them on those loan origination systems and all the, how to calculate debt ratios, debt to income ratios, and things like that. We're just making it, just follow the steps in the technology. You can generate pre-qual letters, you can generate pre-approvals, all that through the technology. And that, we think, is why this program is going to be the most rewarding, the easiest for not only you, but for your consumers and your clients. Eligibility. Now, you're becoming an employee of a bank, so there's a cost. The bank needs to pay to hire you as an employee. They need to train you, and they're going to pay you for that. So they're not, if you're doing just a couple of closings a year, they can't afford to do that. So the ideal agent is closing 15 or more, has had 15 or more closings in the last year. That's the ideal. If you have that right now, we can send you an offer letter, literally. If you're part of a team that is doing 15 or more closings, and if the team's gonna, if you can work, I mean, because we have some agents who are doing 15 or more, but they say, I don't know if I have time for it, but one of the team members, he or she could do it. So that works. We can qualify you based on the team's production. If you have 6 to 15 closings, you're eligible. We encourage you to apply. Again, we're going to focus the hiring criteria. The primary hiring criteria is number 1, 15 or more closings. Number 2, you have to pass a background check. And the background check, there's a little flexibility. If anyone had some minor infraction at some point, they're realistic about it. Any financial crimes go nowhere. I mean, will be denied. But if it's something that's minor and explainable, then that's generally the bank has been willing to work with. If you have 0 to 6, 2 things: join a team that has more closings, or increase your closings. Those are the way to qualify. Referral program. The other part that's nice right now, Quontic Bank wants us to hire 500 mortgage loan officers in the next 30 days. In the next 90 days, we're to hire 2,000. By September, we're trying to hire 10,000. So we're hiring lots and lots of mortgage loan officers. So whether or not you join, whether or not you qualify to join, if you know anybody who fits that criteria and they do get hired, we can pay you a referral fee, which is 0.1% on the first 30 closings of anyone you refer who gets hired. So if it's a $400,000 loan, that's $400. If they do 30 closings over the next year or two, or however long it takes them to get there, that would amount to $12,000. So it could be a decent amount of income if you know anybody who could benefit from the program. And that's what we're doing. And we're so pleased to team up with Ray and Debbie to help spread the word on this program. And if you're interested, what we do is please schedule a call. It's a 15-minute call. I'll go over basically your qualifications, answer any questions you have about the program. And then if you're qualified, again, 15 or more, we can literally send an offer letter out that same day and get you started on the program. And that's the process. And again, that referral program, that's open to both if you join as an MLO and if you don't join as an MLO. Either way, we can still pay the referral. And Ray, that's kind of the program in a nutshell.
Yeah, I love it. I'm going to drop a link here, guys. If you want to book a call with George, you will be talking to him one-to-one. We can go ahead and stop the screen share. And I guess, George, what my first question would be to you is, where did this program come from? And why did you guys decide to start to deploy this?
Sure. So in December 2022, I was running a national originator, and we heard about this rule change. And we, like many others, said, okay, this is going to be a great opportunity, hire real estate agents to become mortgage loan officers. And we, Zero Mortgage, Rocket Mortgage, almost everybody had the same challenge. We recruited mortgage loan officers, but getting them through the pre-licensure course, yes, but the exam was really a big barrier to a lot of people. And many agents who went through that and didn't pass the exam were like, hey, I'm done with this. I'm just going back to real estate. And so what we did is we teamed up with a credit union in mid 2023. And the advantage, again, they had is that they could hire federal mortgage loan officers. And we did that, and we hired lots of agents as mortgage loan officers. I think we hired 2,300, so a big number. But it was the process of boarding all the MLOs and the process of all the production they brought. The credit union wasn't ready for it. Their systems and technology just weren't couldn't sustain itself. So we went to Rocket actually and said, hey, we want to team up with you. Look at what we've done. This is really working. And we went to the credit union and said, hey, Rocket wants to help. And the credit union said, hey, we could do everything on our own. So since then, we've been looking for a bank partner. And it took a while. Even though we had Rocket, there's a big barrier when we went to banks, because many banks were interested. But when we're saying, hey, we want you to hire thousands of agents as mortgage loan officers, many of these banks say, we have like 200 employees. You want us to go up to like 2,000 or 5,000 or 10,000 employees, and they saw that as that was a huge barrier. We finally teamed up with Quontic Bank, and they said, hey, they were sold on the program and said, keep going. Right now, we have this target of 10,000, but they say after that, they just want to keep going. As a reference, Chase, Bank of America, Wells Fargo have roughly 20,000 mortgage loan officers each. So that's so we want to get there and keep going.
So George, let's I guess let's talk about a couple things structurally. Let's just talk about being an employee of the bank, right? Like uh, one of my close CEO friends of a brokerage said that agents are agents because they're the unemployable. So so why would an agent want to become an employee of a bank, or how does that structure work? Can you walk us through some of that framework?
Sure, this is a very part-time job. Your primary job remains real estate, marketing, helping clients, showing homes, listing homes. But I've been an agent and a broker before, and many a times you have clients that come to you that want financing. And I think we probably all referred, oh, I have, here's somebody I can recommend 3 people, you can choose. But now you're still going to recommend 3 people, but one of the 3 recommendations is going to be, hey, I work for Quontic Bank and I can help you. And in my mind, it's like you're at the checkout line at Best Buy and they say, hey, you're buying this, whatever you're buying, computer system technology, and they say, hey, we can offer financing. So you're right at the checkout line, and that's most convenient is to do it there. So I see it kind of the same here. You're right in front of them. They already are working with you because they trust and or like you. And so you can do it. And especially if you can say, well, if you can go to Rocket Mortgage and check your pricing, but I'm going to be able to offer you better pricing than that. I think that's a compelling proposition that we're putting into the agent's hands, and then the agents. I mean, but then where I think there's a challenge is, so many times on these different programs, it's okay. Now there's a whole nother role of training and learning and systems for the MLO, and what we've done with this program by kind of leveraging Rocket's technology is to make it as easy as possible, to step by step for both the MLO and for the consumer. The consumer can log in and see where their loan is. It makes it easy for everybody.
One of the things that's attractive to me personally is the range of loans that you have access to, right? And for me, I look at it like historically, you're always going to a bunch of different lenders for specific things, right? You have your like investor friendly guys, you have your people buying and selling where maybe there's a double-ended deal. You have specifically new home buyers or helping somebody get qualified to buy their first home, right? And there's a little bit of runway there. I like that there's one bucket of, hey, we have access to all of these products in, for some degree in one place. And what does it look like for me to pick up the phone and have a conversation or submit an application and go through that process a little bit more linearly? So it's a little bit cleaner for both me, the agent who's involved in managing the transaction, but also the client going through understanding what their real options are depending upon what's going on in their life and the transaction, right? Because we all know transactions can be messy and we need solutions. What does that process look like, right? So if I join and I become part of this program and I have a client and they need a loan, whether it's through Rocket or Quontic or even Fly Homes, how does that process look?
Yeah, you're going to one place, one user interface where you are entering the application. You can do it obviously in person or by phone, but you're taking the application. Once you complete the application, it's going to the technology will display which loan or loans products the client qualifies for, and it could be, hey, they're conventional 30-year fixed, or they don't qualify, credit score is too low, so maybe they're offered a non-QM option. So based on that, you'll be offered multiple choices, and that's basically for the consumer, which path do you want to go, and then you select it, or they select it, and then you enter that into the technology, and the process goes from there. But you'll be one application for all the products.
Okay, so far I apply, I get approved, right? We have our onboarding call, so to speak. I can take an application. What is the expectations on the bank side since I'm a W-2 employee of the bank for some time? How does that work?
You will be paid 5 hours a week at $16 an hour.
Okay, so
And
Starbucks money.
yeah, sorry, sorry. This is basically, this is for the bank to comply with minimum wage laws across the country. So they pay $16 an hour. That is treated as a draw against commission, except in the first month. In the first month, you get to keep it because you'll be doing some training. But after that, it's a draw against commissions. And when you have a commission, maybe you work on 5 different loans in that month. One closes, they'll claw back the draw, and that's it. So it's 5 hours a week. You know, there's no health insurance. People ask that. There's no benefits like that. There is a 401k that's optional. But other than that, and you'll have payroll taxes deducted from your paycheck. You're paid every 2 weeks, and that's the system. You will be a bank employee, part-time, 5 hours a week.
Okay. Are there any restrictions when I become a bank employee for any of my other business or extra businesses?
No, we're expecting that you are working at a minimum as a real estate agent or broker, and potentially you have other endeavors. There's no restrictions whatsoever on those other endeavors, except that you can't be a mortgage loan officer for another bank or credit union.
Okay. And what about personal deals, investment properties, private residence?
No problem on personal deals. You can do loans in your own name in LLCs, and there's not a restriction. I believe Rocket may have a restriction where you can do them, but you can't charge.
You can't make money on yourself.
I don't think you can make money on your own deal, but they probably discount it for that. So kind of like an employee type arrangement.
Okay.
But other than that, I know there's a bank. I asked this question to Quontic Bank on the investment side, because some agents talked about, hey, I have some rental properties. Can I do the DSCR loans? And they said one of their MLOs has like 40 rental properties, and they made 40 loans to them. So there's no hesitation there at all.
Okay. I'm going to ask you a loaded question. What are agents afraid of in this situation? Typically, like, what do you see? Where's the resistance, if that makes sense?
I think once they understand it, the resistance goes down. I think the biggest challenge doing this over 2 years was they were twofold. In some situations, the real estate agent was teamed up with an experienced mortgage loan officer at the originator, and basically they kind of fed their deals there and did maybe some minimal application at the beginning. That it made it so that then they'd be following up with the MLO. How's it going? And we all have worked with MLOs. Some are good, some are not so good. Some are great at communication, others aren't. So I think there was some frustration there sometimes. And then especially when that MLO was working with multiple agents. So they didn't have full control. And I think some agents, the benefit is this gives you much more control and visibility over the mortgage piece. So that's a benefit. When you are just handing it off, I think you lose some of that control. And then the other way, some others have said, hey, we're going to go through a full training and fly to wherever for a 2 or 3 day training, and this is like a second career. And many agents know real estate is my career. If I want to do this, it's kind of just as a side gig. I can make good money for a small. I mean, we're trying to pay you $4,000 loan amount. At $400,000 loan amount, we're paying you $3,000. If you can get that done in 2 hours, that's a great return, because it's so much of the work that you're doing. You're doing the marketing, you're engaging with the client, you're showing the homes, you're doing all that anyway. So now it's adding a couple hours to the transaction, but rewarding you significantly for that.
Yeah, one of our friends here is a recovering loan officer, and she might have some PTSD from being a loan officer. The process sounds really simple, right? Like the picture that we're painting is unicorns and rainbows. Is that really the case, or are there some hoops we have to jump through?
No, I mean, we've been working on this for 2 years because we've seen other iterations that we've been involved in. We've recruited for some others who are doing similar programs, and kind of learned from all of them to get here. And here would be the worst absolute thing is for you as the agent to do this, and then the loan at the end doesn't close. And we've all had that, or it gets significantly delayed. And now, oh boy, now your client's looking to you. You can't blame it on the MLO. You're the MLO. So that we're going to make sure. I mean, we all work with clients who, are on the fringe of qualifying. And so basically you'll know they can't qualify, you'll get to that point in the technology, hey, their credit score isn't where it should be. But I will share on that. Rocket runs a program called Credit Upgrade, and I think it's a fantastic program. Any of your clients, even if their credit score is in the low 500s, you can enroll them in Credit Upgrade. It's basically, they look to boost the credit score, remove disputed items and things. It's kind of like credit repair, except it's actually done by Rocket for free. So it's free because they want to get the loan. They want to help you get that client who's almost qualified but isn't quite qualified, get them to the point of qualifying it. And also for those who are qualified, let's say they have a 660, but the pricing gets better if they get to a 680 during the loan process. So they can apply for the loan can be in process, the appraisal is going and everything's going. But now you're just trying to get them a slightly better rate. Rocket will do that through this Credit Upgrade program, again, for free. And ideally, they qualify by the conclusion, they're qualifying for a better rate than what you offered them at the beginning. And again, that's all free. And that's not exclusive to this program. It's something that Rocket does anyway. And they've now extended to this program. So it's, again, we all have people who come in. You'll be able to run the pre-qual letters, but sometimes you say, I can't get you qualified because of whatever the situation is. And but let's try to work on it, especially if it's credit, something that can be improved.
Okay, I love it. All right, we have a couple of questions in the chat here from Kim. She asked, non-compete clause in contract, and if so, then for how long is it in effect?
Non-compete, if we're talking about as an employee, I don't believe there's a non-compete in the. So if you were to join today and you were boarded with Quontic in a week, you could not join another bank or credit union until you decided, but anytime you could, you can't be with two at once in the NMLS because there's only one NMLS registration per person. But if you want to change, you can change. If next month you said, hey, I'm joining Bank of America or whatever, you can do that. And there's no like extended non-compete clause. It's basically, we're trying to offer you the best program. We think we have the best program. We don't think you're going to want to leave, but if there was a reason that you wanted to leave, then you're free to go. I mean, we're not providing you leads. You're bringing your own leads. So there's nothing that we're giving you in terms of business development or think that we would potentially say, hey, we spent the money on that.
Okay, perfect. Terrell, I see your hand up. You're up.
So I was just going to tag on to that, given my background, which is I'm the recovering loan officer, and but I'm also a real estate broker, and I'm in the state of California, and with a broker's license, I can do both very easily. I have chosen not to just kind of have someone to blame, like you mentioned, but between the escrow officer and the loan officer, and so in kind of answering the earlier question is that in any case, you work for one company, you don't work for three or four, like with your real estate license, you don't, oh, well, I like this part of this company and that part, so I'll join three companies. It's just one, so that's a kind of a consistent rule under the umbrella. What I'm curious about or many things, and probably should talk to you so as to not bore everyone, but are you also doing VA and FHA loans?
Yeah.
Okay, good. And then what about commercial? And then
we do have some commercial multifamily through Quontic. It's not a big focus, and it goes up to $2 million. So it's small balance commercial multifamily. So 5 or 6 units, 7, 8 units. They don't do 150 unit apartment buildings or stuff like that. Okay, but smaller commercial, which you may run into, we can do.
Yeah. So then the other question I have is, do you handle those kind of quirky loans, as I would like to call them, which would be like church, nonprofit, that sort of thing?
No, we don't. Those we don't. All residential, and then single family and 2 to 4 units, and then do the small balance commercial, so smaller commercial multifamily properties, mixed use properties, but not churches. Or you said churches. What was the other one?
Nonprofit.
Well, they do LLCs. There's no reason they couldn't do a corporation that is a nonprofit corporation that's buying a house to rehab or something like that. If it's a nonprofit,
no, this is definitely kind of the single occupant business owns the property, has the cash flow, is in an interest-only loan right now and needs to refinance out into an amortized loan is.
If it's a $2 million or less loan
Nope,
size?
it's 400,000.
Oh,
Property's
yeah, 2
probably
million
worth,
or less. 2
yeah,
million or less.
yeah. So
Oh, yeah, so that
possibly.
could work. That could
Okay,
work.
because
On a
the
commercial
values,
property?
the value is around 3 million.
Okay, that could work.
Yeah, so it's, I mean, it's a very, very low.
Very low loan to value.
Yeah,
That
so
would be, that's a possibility.
okay.
I think a high possibility. The church is buying a house or something like that, but on just a specific standalone church, those are challenging loans. It's
What
it
I've
is.
run into over the years is quote unquote, no one wants to foreclose on God.
That's
So that's
somewhat understandable.
yeah. So that's where that came from. And so let's see if there was anything. I'm sure there was something else, but I'll let somebody else ask some questions.
Yeah, I'll give you a broad. So Rocket does mainstream loans, like you mentioned, FHA, VA, conventional, jumbo. That's everything they can scale that the majority of buyers want. That's Rocket, what Rocket does. Quontic will do kind of the more quirky loans, as you said, Terrell, which will be the non-QM, the DSCR, the ITINs, the LLCs, the corporations, and that's where there's a lot more flexibility to do kind of odd stuff.
Well, the other little, I'm just going to pop in one more because it's all about
Uh-huh.
the Florida, the West, I mean, the East Coast and California, of course, with our wildfires, we're having this huge issue with insurance.
Huh.
And it's
Yeah.
like, I mean, I'm not sure, I mean, it's like we're going to be running into walls with that anyway, but is there any kind of dispensation that they're offering? I mean, because again, it's like where I live, I was surrounded by the fires, but I mean, we got the smoke and all of that, but we didn't have any fires. But at the same time, if I was going to get insurance, it would be, 5 times what I'm already paying, that sort of thing.
Yeah, no, I think all the more will be like every other mortgage lender in that regard. They are
Okay.
going to want insurance, and
course,
that is recognized to be a challenge in both Florida and California.
Well, and even now, because I mean, there's the fires in the Carolinas, so I mean, it's just, we're
Yeah.
just, it's becoming kind of like the issue, so to speak. So,
Mhm.
okay. I know there's some other questions out there, so I'll
Okay, thanks, Terrell.
Thank you.
Eunice, you asked, you're a real estate investor. How can we share more how you can submit your own deals in your LLC name? You'll treat your LLC like one of your clients, essentially, from my understanding. Is that right, George?
That is absolutely right. No problem though. You're disclosing that you're the MLO, but as long as everyone knows what's going on, that's absolutely fine. And especially Quontic, if you're doing like the DSCR loans, which are really popular amongst investors, they're set up to do an unlimited number of investor type loans, and they will do them if you're an MLO through the program. And Rocket will do them as well. I think Rocket, and I need to get clarification, but Rocket said, yes, we'll do them, but we're not going to pay the MLO on them. But there's some prohibition against that when they're doing like government type loans. But the DSCR ones just go as many as you want.
Okay, awesome. All right, guys, I'm going to be quiet and let you guys ask questions now. Who else has questions? Feel free to unmute and just jump in with us. We want to make sure we serve you guys and answer your questions. Natalie, I see your camera on. Does that mean you're jumping in?
Oh, no, I'm sorry. I had to
It's okay.
walk away for a minute, but I'm good.
Okay.
Thanks.
Victoria, I know you came in late. Do you have any questions, or do you want kind of a quick overview of what we're talking about here today?
A quick overview would be great. I'm sorry, I had some car trouble, so I couldn't join. But I would definitely like to get a deep dive of what was covered. I don't have a lot of questions right now because I did join late. But I've enjoyed just getting the little bit of information that I did get.
Okay,
I mean,
George.
I'll give you like the 1 minute. The offer is to pay you 0.75% on every closed loan. So just as a quick reference, $400,000 loan, that's $3,000. Being the mortgage loan officer on the transaction, you can, FHA clarified guidance a couple of years ago that now mortgage loan officers, real estate agents can earn both the real estate commission and the mortgage loan officer commission on the same transaction. You becoming an employee of Quontic Bank, you can offer Rocket products, so conventional, jumbo, FHA, VA, Quontic bank products, which are investor as well as ITINs, non-QM, DSCR, HELOCs. And then there's also a Fly Homes product, which is a buy before you sell bridge loan product, which we've seen popular in some competitive markets where people can make non-contingent offers even while their home is still for sale. The key, some big advantages to the program is as you're becoming a mortgage loan officer for a bank, you don't have to go through a pre-licensure course. You don't have to pass the NMLS national exam. All you do is pass a background check, and you can originate in all 50 states. So big advantage. There's trainings paid for. The technology you'd be using, we've taken Rocket's technology, consumer direct technology, and made that so that's what the MLOs will basically be using. It's very intuitive, step-by-step, guides you through the process. The target is that you spend roughly 1 to 2 hours per loan. And I didn't mention this earlier, but Rocket you will have access to support 9 a.m. to 9 p.m. 7 days a week. So there'll be a live person who you'll know, account rep, who you can, a team of account reps who are supporting this program, who you can call and get help. When you get, you're meeting with a client on the weekend and, hey, there's a special situation. Someone just got married, just got divorced, just lost a job, just became self-employed, whatever the story is, and you're not getting, you can't figure it out in the technology, you can reach out to someone and they will be there to help.
Okay.
And then eligibility, we're looking, if you have 15 or more closings, we can hire you right away. If you're part of a team that has 15 or more closings, the team can designate somebody and we can hire you right away. If it's 6 to 15 closings, and this is in the last 12 months, then you're eligible. And then if it's 6 or less, we can't hire you right now. The target or the suggestion would be to join a team that's doing more, or has a collectively 15 or more, or increase your number of closings to get to that. The key thing is, because you're becoming a bank employee, there is a cost to the bank to hire you and train you. They're going to pay you for the training, and and for 1 or 2 loans a year, they can't do that. The target for everybody, their goal is 12, that everyone does 12 loans a year, so 1 loan a month. That's the target. That's what the ideal. As long as you do 6 loans a year, you'd remain employed. And so those are basically the thresholds. If you want to do 100 loans in a year, you're welcome to do it. You can do refinances. It's not just purchases. You can also do refinances, and especially as rates go down, some people who bought a couple of years ago may want to refinance, and now you can be the MLO on that. And even if you do a loan, and a year from now the rates go down, you can do the refinance on that.
Okay.
Hey, Terrell.
Thank you. I definitely want to.
Thanks, Victoria.
I'm sorry. Go ahead.
No, go ahead, Victoria. I'm sorry, I interrupted.
Oh, no, I was going to say thank you for the information. I definitely want to, I guess, research the not just the requirements, but maybe getting into that mortgage loan officer role. That sounds very interesting to me.
Absolutely. Yeah, that basically, if you're interested, you can schedule a call. I think Ray or Debbie put the link in the chat, and you can and I can give you more information and answer any questions you have.
Okay, perfect. Thank you.
No problem. Thanks, Victoria.
Thank
Hey,
you.
Terrell.
So, and I'm sorry, is it Jorge or George?
I use George. It's easier.
Okay, I'm in Southern California, so Jorge
Yeah.
is just as, anyway, at any rate, so we were saying like a minimum of 6 transactions or loans per year. So the number of loans is more important than the value of the loans.
Yeah, I should say that it's the target is at this point it's number, but I guess we could break that down into loans and target,
I mean,
yeah, because California's going to have much higher value. So yeah, that's fine. It is also, they do also look at numbers. We've kind of used the number of closings, but I suppose, if somebody had 2.5 million in closings, which in California could be one house.
Yeah, well, that's what I was going to say. That could be one.
Then I think that would be good to qualify. And then on an ongoing basis, if you were doing, because I'm in Chicago, there could easily be, you could do 15 loans. They could all be, you know, if they're on the affordable side, that could be $3 million, or in California, it could be one house. So we get that. If it's higher value homes, there's definitely, we can make accommodations for lower volumes.
Yeah, because I mean, that's the reality here. So
yeah, no, thanks for bringing that up. That's an important point.
Yeah.
We have some flexibility. I mean, basically, as long as there's production, and to Terrell's point, as long as it's, multi-million dollar, a couple $1 million in production, that will work and keep everyone happy. It's just, again, we're hiring. You're getting hired. It's not 1099, so there is a cost to carrying you as an employee each month.
Yeah, I gotcha. The other question I had, you mentioned that we as the loan officer would be filling out the application, and I know at this point so much of that is the loan officer will send an application to have the person fill it out. When I was doing loans, I found, again, it was one of those things that it's daunting. People look at those loan applications, they go, holy crap, I'll do this later. And so what I would do is I'd fill everything out, I'd upload the debt from the credit report, blah, 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 blah. And then the only thing they really needed to put in were their assets, which made it very easy. But I mean, but at the same time, that was a few moons ago. And so I'm just wondering, again, what that whole.
No, two great points in there. One is you do have to do the loan application. This is not so much because you're right. Many times today, people just send out a link and then you can complete the application. Why not? Well, in this program, you're a mortgage loan officer. In order to justify paying you, and you have to do a certain amount of work on the file. So we had compliance counsel who reviewed and said they have to take the loan application. So whether it's in person or online on an interview, then you have to take the loan application. Plus there's some other steps, but they're all built into the technology. But I agree with you 100% on this. It is ominous for some people it's challenging, not ominous. It's challenging for some, sometimes when people, especially the first time they're filling out a loan application, it's really detailed. When I was a loan officer, we'd always do it by talking to the people, because then when they get to something they get stuck on, you can talk them through it. You're asking them the information. People like to talk about themselves generally, so you ask them how long you've been there at your job, and you get to how much even the assets. I'd even ask them on that and get the information. Then you're basically asking them to sign it, typically electronically in this age. But yes, I think A, you're required to take the application, but B, I see it as an advantage because you're not going to have people get stuck and, like you said, put it off, which otherwise is super common.
Yeah, it's all, it's all very dynamic, I mean, this business we're in. And just an aside, which has nothing to do with what we're talking about, but you have beautiful skin.
Thank you very much. I appreciate that. And I grew up in California, so I did get some sun out there, but I ended up in Chicago, or Chicagoland.
Yeah, land. All right, cool, guys. Who else has questions? We'll do two things. We'll drop George's link one more time in the chat, and then we will get a replay for this. It'll be out Monday afternoon. Usually it takes us 24 hours to turn stuff around. But we also are going to be doing this again Monday afternoon if you want to come back for a second visit.
And I would also say, come back and bring a friend with you, right? And I'm sure if you do that, George can, you can reach out to George in advance and say, hey, this is the guest I'm bringing to the call, right? George, does that work for you?
Yeah, that works out fine. That'd be great. That's the way to earn the referral. Absolutely. We'd appreciate that.
Yeah, so bring them to the call and let them hear firsthand for themselves, straight from the horse's mouth, exactly what is happening here, and then it's less work for you to do to get them get them signed up. All you have to do is invite them to come to the call tomorrow afternoon, and it is same bat time, same bat channel, just tomorrow.
Correct. Yeah, and actually, I'm in the chat. Kim's question: you don't have to be an MLO to get the credit. You can be. You can do it. We can pay you, and that's as an independent contractor. So if you do have a referral that you want to introduce, we can pay you, and then you're paid as a 1099 contractor if you don't become a mortgage loan officer yourself.
Okay, cool.
And
Any other questions, you
I
guys?
appreciate that.
Yeah, sorry, George.
No, I was going to say, I'm looking at the chat. I appreciate your kind comments, Terrell and Kim.
Yeah, these are great questions.
All right, nice.
Cool.
All right, I look forward to hopefully. Please take it. I'd love to talk to each one of you, and hopefully work together and get you started on this program.
Yeah, and if you guys need anything, direction, questions, feel free to message Debbie or I, and we can connect you with George also. So please don't be shy. Okay, Sita, let's see. I'm just starting back as a realtor, was in property management for the past 10 years. Thought this webinar was also for investors, for investment properties. Okay, Sita, thanks. You may want to book a call with George to see if it's a good fit for what you're doing and the clients you may serve if you spent 10 years in property management. Totally up to you, but I would definitely entertain that.
And Sita, this is to reinforce this. We're not trying to teach you to become a mortgage broker or MLO. You will become a part-time MLO. We made it as easy as possible, so it's not like learning a new career, which that is a barrier, as you asked Ray earlier. A lot of people, I don't want to learn a whole second career. No, we've made it as easy as possible. That this is, you just follow the steps and you can be successful.
Okay, cool. Well, we'll give you guys your afternoons back. Thank you all for joining us, George. Thanks for being amazing. This was fantastic, man.
All right, thanks everybody. Have a great rest of the day.
Okay, see you tomorrow.
All right.
Bye.
Bye-bye.
Bye.